Australia's economic recovery has been faster than anticipated. The consumer has been at the forefront of this economic recovery. They have been in the engine room propelling this recovery forward. Businesses have been reluctant to enter the engine room, but this is starting to change and will shift further as we move through this year. I've been out and about a lot in recent weeks, meeting and speaking to our business and corporate customers. A common theme has been optimism in the outlook for their businesses and the economy. This optimism is certainly being echoed in recent business surveys. One commonly eyed monthly business survey revealed recently that conditions, confidence and capacity utilisation have risen to record highs. In fact, capacity utilisation is now at levels at which businesses might have an imperative to expand. The strong interest in industrial property might also be reflecting these needs for expansion. The recent federal budget initiatives certainly focused on trying to spur businesses to invest and hire by extending tax initiatives to businesses. Businesses had built cash flow buffers over 2020 as fears over the pandemic led them to worry about revenues. Indeed, a recent survey showed that the number one reason businesses were not seeking additional funds from financial institutions was because they already had sufficient funds. While we are not out of the woods yet with the pandemic, there are good reasons to expect business spending to lift this year and next, with businesses feeling optimistic about the future and surveyed conditions the best on record. The first signs of green shoots of a recovery in business spending arrived late last year. We expect data this week to show the recovery has continued. The extension of government initiatives around loss carryback schemes and immediate expensing will help fuel this recovery. But there are still issues facing businesses. First, there are supply chain disruptions, which manifest in delays, uncertain delivery times and variability to revenues. In fact, last month, 3 in 10 businesses surveyed by the Australian Bureau of Statistics said they were experiencing these disruptions. Second, more and more businesses are expressing that they cannot source labour or cannot source the right type of labour. Whilst this feedback is strong from businesses we have been speaking to, the wages data suggests that the skills mismatch and the labour shortages are not leading to widespread growth in wages. The wage cost index is still growing at a very soggy rate of 1.5% per annum. To cause inflationary pressures to build, wages need to be growing at a rate of at least 3% or more. There will be some relief from these two issues when international borders reopen and immigration resumes. The government's timeline for that is still the middle of next year. Encouragingly, the vaccine rollout appears to now be accelerating, which perhaps gives us some hope that the international borders might lift earlier.